let's talk about something called the collar. Now, I love this strategy. In fact, it's my favorite. In fact, I will do this with Preston's money. I will do this with all of the money. I will do this with all of my money. And you should do this with your money. At some point, you should learn, for free, how to get into a collar. What's a collar, Jeremy? Well, remember earlier when I talked about how you can rent out a stock? When was that? I feel like that was... 10 minutes ago. So remember 10 minutes ago when I talked about you can rent out your stock? You can make money and you can bring in money for renting out your stock. You can take that rent money and buy an insurance contract with it higher than you bought the stock for and either make money or make money. What a problem to have. Woe is me. The struggles of life. I will either make 5% or 25%. Tough. Here's how they look. Right, that's the definition. When should you use collars? Right, when should you do this? The absolute best time to implement a collar is once a trader has a positive equity position. A positive equity position is when you buy a stock and it's gone up. I talked to someone a year ago who thought equity was a disease, and I was like, no, that's HIV. Equity, totally different thing, right? This is the best time to do it. Most of my friends use collars to protect their downside, maximize their upside, and get paid to do this because this is a net positive transaction. You actually, hold on for a second. You actually can get paid to do this. You actually make money to not lose money. I'm running out of breath. You can actually bring in monthly income on your stocks to not lose money on your stocks. What world are we living in? The answer, the best one ever. Yes. The best one with the best country, ladies and gentlemen. This is it. This is it. So, Ellen buys a stock, whatever, doesn't matter, at 53, 54. I threw random numbers in. The stock goes up to 62. Is she in a positive equity position? Does everyone understand how she's making money? So as you're understanding this, write down a quick math formula for me. $3 times 1,000 shares times 200 days a year. What is that number? If you're capturing a $3 stock movement, 1,000 shares at a time, 200 days a year, that is $600,000. $3 with 1,000 shares, that gives you 165 days to do whatever you want. Hashtag blessed. And you can get paid for that problem. Would you like me to keep going? 3 more minutes? Thought so. Usually the worst case in a collar is the trader just gets into it at the wrong time. They get a little scared, they get a little bit of panicked. Has anyone ever got panicked or scared before in the stock market? I have, yeah. 2010, something called the flash crash. What am I doing? Just losing money left and right. It was awesome, right? May of 2010, I had no idea what I was doing. But that's usually what happens. Traders get into these at the wrong time. And if you get into the wrong time, you'll spin your wheels like everything else. I mean, if you buy a house that's overinflated at the wrong time and you have to hold on for it for 20 years, it'll probably be a while before you make money on that position, right? So you could do anything at the wrong time. If you punch someone at the wrong time, it can be bad. If you're in a boxing ring, good. If you're not in a boxing ring, probably not good. Make sense? So you can do anything at the wrong time, it's the wrong thing. If you do the right thing at the wrong time, it's still the wrong thing. But if you do the right thing at the right time, you make money. And I love money. So, here's an example of a collar. You buy 200 shares of Chipotle at $1,300 a share. When Chipotle goes to $1,700 a share, You sell an $1,800 covered call. I know you don't know how to do it. You haven't learned my free system yet because I give it away. And then you buy a $1,450 put option. $1,450 put option is higher than $1,300, yes or no? Is $1,700 higher than $1,300? So you can either sell it at $1,450, which is $150 higher than $1,300, or you can sell it at $1,700, which is $400 higher than $1,300. So you either make $400 a share or you make $150 a share. What am I going to do with all this money? Go to Chipotle for free for the rest of your life. That's what you're going to do. I don't pay for burritos anymore. Why would I? I can just publicly trade this stock. It's just right there. You guys pumped yet? Okay. Here's another example. Who here's heard of Pinterest? Okay, Pinterest, such a fun stock to trade. This thing goes from $20 to $30 like every 6 weeks. It's crazy. So this is a real example. And my real estate fans, I don't know if you're doing the ROI on any of these yet, but you're losing. So if I buy 4,000 shares of Pinterest, which I did, $21.39, my total investment was $85,000. I waited 5 days for it to go up 20%. Woe is me. I have positive equity. I get into a collar. A collar, again, is selling a covered call, which takes 1 second to implement. No emails, no phone calls, no text messages, no contracts, nothing to sign. It goes like this. Click, order received. Then you buy a protective put. In this example, I sold for $1 a share, which is $4,000. This is just second grade math. Don't lose me. I had 4,000 shares. I sold for $1 a share, made $4,000 of net positive cash flow. I then take that $4,000 of net positive cash flow, and I buy an insurance contract. That insurance contract cost me 50 cents with 4,000 shares, which is $2,000. I made $4,000 to spend $2,000 to make $2,000 net positive cash flow on an $85,000 position to then either make $24,000 or $6,400. These are my two worst case scenarios. Am I making it seem easy? Is it easy? Is it simple? Is it also difficult?
The rich stay rich.
That's a real thing. That's not a limiting belief. Like, the rich get richer. No, that's just real. That's not a limiting belief. That's just facts. Right? The rich get richer because they know how to do this. Warren Buffett only does $250 million doing this every year on the shares that he owns. And then he takes a loan out against the shares that he has, and no one ever pays taxes on a loan. Problems. Well, what should we do? Should we all buy a yacht and go to Croatia for a week and just sail around on a 170-foot mega yacht?